The CoinDesk Spotlight is brought to you by Nexo, the place to earn on Bitcoin, Ethereum, and more.
Total locked value in decentralized finance sits at over 52 billion, according to DeFi Pulse. As DeFi presents an alternative to the centralized banking system, regulators are faced with the challenge of keeping up with fast-paced growth in the space. Joining us now to discuss is Tegan Kline, co-founder of Edge and Node, a software development firm dedicated to building the decentralized web. Welcome to the show, Tegan. Last week, we saw that the International Organization of Securities Commissions hosted folks from the CFTC, the SEC, and DeFi exchanges as well, like Uniswap and DYDX. Regulators are trying to understand DeFi, and what they've said about it so far doesn't sound so good. The CFTC Commissioner, Dan Berkowitz, saying several DeFi apps could be illegal. SEC Chair Gary Gensler saying DeFi could raise a number of challenges for investors and regulators. Is a regulatory crackdown on DeFi approaching?
It seems that there's been talks about bringing a compliance layer into DeFi, but whether or not the market will accept that has yet to be determined. I think regulators forcing a compliance layer will likely lock institutions like Grayscale and Galaxy out of the DeFi market, which will allow a lot of retail to kind of continue to get in ahead of those institutions. But the great thing about blockchain technology is oftentimes the regulations could actually be built into the code. And if you regulate one, we've regulated Shapeshift and added KYC there. A lot of new innovation comes. There's been many other DEXs that have arrived since that regulation has happened, some that custody, some that don't. And instead of kind of stifling innovation, it's great to see that regulators are kind of speaking with and talking directly to some of the founders within the ecosystem to see kind of how founders and regulators can work closely together to kind of address the problems that are at hand in a way that's not going to stifle innovation.
So Tegan, thanks for coming on. For the folks at home who are watching and they don't quite know what the graph is, can you explain what it is, why it's important, why do we need it, and what it has to do with DeFi?
Yeah, absolutely. So the graph is the decentralized indexing and query layer for the decentralized web, for Web3. And so the graph, kind of like what Google does for the web, indexing all of that data, making it organized and accessible to us to be able to kind of search then the internet. The graph does that in the blockchain space in a decentralized way, allowing for developers to access blockchain data in an organized way and serve that data to their users. So the graph is the backbone of DeFi and many other use cases within the Web3 space, like NFTs, DAOs. So much innovation is happening, and it allows developers to have open APIs that then can kind of become Lego building blocks for innovation.
And it's not just one blockchain, right?
Correct, yeah. So the graph currently supports 22 different networks. The graph started with Ethereum and has grown since then. So supports Celo, Avalanche, also layer 2s like Arbitrum and and Optimism as well.
Do you have a sense that there are a lot of newcomers entering the DeFi market? Because, in the past, DeFi has been relatively inaccessible or relatively incomprehensible, even by the incomprehensible standards of crypto in general. So, are you seeing newcomers entering the market, and who are they, and what are they doing in the DeFi space?
Yeah, absolutely. So we're seeing a lot of growth within the DeFi sector. So we've seen substantial growth from just 1 billion queries in June of last year to 25 billion queries in all of the Web3 space. But the majority of that is happening within DeFi. And the great thing that the graph does is it allows developers to focus on great user experience as opposed to kind of building out clunky indexing in-house. And so we're seeing applications that are actually starting to compete with centralized applications. And Uniswap, for example, is a decentralized exchange that's actually done more volume than certain centralized exchanges on different pairs. And so I think that that's one that a lot of people use. But I agree, we have a long way to go before our parents and grandparents use DeFi.
But just following up on that, sometimes you hear a lot of people like in the DeFi space saying things like, we're going to build the Google of Web3, or we're going to build the Amazon of Web3. But isn't the whole idea that this is supposed to be like a completely different world? And is it good to be sort of like using these sort of old companies as paradigms for what we're trying to build?
I think that's a great point. I think that you need to start somewhere with something that people understand. And so the graph, as kind of like the Google of the blockchain space, we are within the blockchain space. The internet wasn't created to monetize data or sell people ads, but that's what the internet is incentivized to do. And the blockchain space is removing that kind of centralized authority and bringing it kind of peer-to-peer in the ecosystem. And so we don't need to engage in those kind of wonky behaviors of selling data or ads. And the graph is actually making open data a public good.
So when will Wall Street finally adopt it, or at least succumb to DeFi? Do you have any estimate, if you had a crystal ball, how far along are we before let's say mortgages are traded on, mortgage-backed securities are traded on DeFi?
Yeah, I think that some of that stuff is already starting to be kind of incubated. And so I would say probably a year or two out before a lot of that comes in. But it is true that a lot of these returns within the DeFi space, seeing 20% or, 30% APY is quite high I come from traditional finance. So from traditional finance. And so I think that those returns will likely reduce as Wall Street kind of becomes more privy to the blockchain space.